Robert Schein's with us, Chief Investment Officer at Blanke Schein Wealth Management. Thank you so much for being with us.
It's great to be here, Nicole.
How do you feel about when you look at this 8 weeks in a row of gains? I mean, when you see the NASDAQ 50%, the S&P up almost 25%, it's pretty, no one expected this kind of year, right?
This has been a sort of the year that no one expected. The first 8 months, you're seeing everyone sort of tepid and holding and hoarding cash. Now you're seeing it put to work in the last 7 weeks. This will be the 8th week of that momentum continuing, we believe, into the new year.
So that being said, and I know you have some picks for us, but how do you go about choosing trends? Is it, cash flow? What is it that says to you, particularly in a volatile market, this might be a winner?
Yeah, well, we did large cap, let's say growth in tech, the Magnificent Seven for our clients this year.
Yeah.
They've done very well.
Great.
So moving forward, we're also now looking to the undervalued sectors, if you will. We really like, the healthcare sector. We like energy sector specifically because they really haven't participated. They have to sort of catch up. We're seeing that broadening of the market of this rally.
Yeah.
That's really what we want to see for a healthy sort of 2024.
Do you still like Magnificent Seven? I mean, if someone wanted to add to their position, I know you have Google on the list today, Alphabet Google. Would you say most of the names are still something you would maybe add a little or not necessarily?
Yeah, some of the names have gotten ahead of themselves. So the names that we like in the Magnificent Seven are Google. We've got sort of restructuring the last few quarters earlier this year. Both top line and bottom line are trending in the right direction. They're growing. So Google has a lot of positive momentum moving forward, and they're going to capture a lot of the ad revenue that's going to be spent in 2024 for the elections.
Right. I mean, I see people saying they still like Microsoft. They seem to be moving away from Apple a little bit. Any other thoughts on any of the names in that group?
Yeah, I mean, Apple and Microsoft, you own them, you don't trade them.
Yeah.
You can trim them as we've done for clients, and then we want to rebalance as we see the market sort of play out.
Right, understood. Let's talk about, so you said healthcare and energy. Energy, by the way, was the worst. I mean, in November, it was the one sector that was down. And do you need to you can take a sip of water if you need to. The truth of the matter is, I know you have some names here, which include Oxy, Google, and Ulta, but you have healthcare and energy as the way to go. So just a quick thought on those two groups. Why did you pick those?
So with Oxy specifically, you don't want to bet against, let's say, who's your friend in that? Warren Buffett.
Yeah.
Right? Just accumulated 28% of the company. Right. It's not only a bet on sort of reshoring of the United States, the Permian, and sort of an oil grab, if you will, but also national security as well. So he basically is betting all in on U.S. oil. Again, the CrowdRock acquisition of $13 billion is going to give them about 13 million barrels a day in production in the United States alone.
Yeah.
So they're undervalued this year. We can see that trend break out for specifically on Oxy. So that's why we like Oxy. It hasn't participated. Oil's going to shore up in the 2024.
Just made that deal that you talked about, right?
It's going to shore up in the new year. And then OPEC Plus will get their act together, and I think they're going to put some floor in oil for next year.
Yeah. We were talking about trends that we see. I look on the subway, what sneakers people are wearing. I had teenagers that grew up in New York City. I used to see where they would go, or they would go to Chipotle or, Nike or things like that. I mean, I could really see some of the trends. You're watching some trends too for a name like Ulta Beauty.
So in my household, right, it's the Peter Lich strategy that you probably talked about. Is like watch where your money's going. Outside of Costco, and that's where we spend our money.
Too.
At least for my son, as much as he eats. We see trends like Ulta Beauty, and Ulta Beauty is very important because it's to the broad-based consumer. It's not Sephora on the high end.
Right.
They've got a really good loyalty base of 39 million reoccurring sort of consumers, if you will, on that loyalty. And so if the market hits turbulence next year, the economy hits turbulence, they can activate their base, if you will, of consumers, which on average, Nicole, spend about $200 a year. So they've got a really good base, and the return on invested capital for Ulta is 45%. So the management of the company has done extremely well by just reinvesting their own money.
You know what's amazing? And by the way, Ulta was a favorite. I mean, that was a name that was just hitting the top over and over and over again. It hasn't necessarily done so this year, so maybe you're actually finding that it's a little undervalued when you look at it, particularly when you compare it it shows what's going on in the market for makeup and skincare and things. Because Elf Beauty, for example, oh my good, I remember the IPO. It's up 155%. But they've been doing a lot of innovation. They're working with a lot of TikTok. I mean, I don't know if it's exactly the same.
Yeah, you know, all of those trend, if you will, beauty and you know, consumer-based products, especially for, you know, let's say my daughter's age group, right, sub 25 to 18, if you will. Yeah. They're going to do all marketing trends as possible, and then you want that place, that single-stop shop for the high end, the low end, and everything that's drawn in that could be trendy on the, you know, beauty space.
So at this point now, I mean, obviously we're right around the highs of the year, and people are expecting rate cuts next year. What's your outlook for stocks? We have a lot of the people picking year-end targets, and I'm not putting you to a year-end target, but they're above 5,000. There's a lot of positive thoughts overall. AI might drive us, whatever. It's lower rates. How do you feel? Are you worried, or are you feeling good about 2024?
I think as we close the year, we're going to see the strength and the momentum continue. So you don't ever want to fight that, if you will. Right. We know that the Fed has pivoted, so then they're on your side. I think in the first quarter of next year, it wouldn't be out of bounds to say we're going to see a pullback, right? And what could cause that? What could be the catalyst? Well, there could be some employment reports that aren't too favorable for the Fed. There also could be what the CEOs are going to report in the fourth quarter, right? The first quarter of next year, about fourth quarter of 2023. And I think most companies, CEOs, are going to talk about how they believe they're going to be cautious into 2024. They're going to talk down expectations, talk down earnings so that they have sort of an easier bar later in the year. But that could spook. I mean, look at Nike today. Nike could be an overall,
down 11%,
you know, sort of picture into what we see into the U.S. consumer. Who knows?
Right. It's great to see you, Robert Schein, Blanke Schein Wealth Management.
Great to be here.
Thank you. Enjoy New York. I'm glad you were able to come here on set.
Yeah, this is
at
beautiful.
The New York Stock Exchange.
Really exciting.
Financial capital of the world right here. We're glad you were able to make it here. Thank you.